Hey, in this video, I'm going to answer the question, what is Pro Forma NOI? Might sound like I'm speaking a different language, and if you're in real estate development or finance, you probably have been asked for a pro forma, and specifically you may have been asked for Pro Forma NOI and might be wondering what in the world are they talking about. And so I'm going to try to break this down for you and simplify it. I think once you get past the strange language, it's actually a pretty simple concept. So before I dive into Pro Forma NOI in real estate, let me just give a little bit of background. My name is Adam Hoeksema. I'm the co-founder of ProjectionHub, and we help founders create financial projections for all sorts of different businesses. Specifically, we do a lot in real estate development and real estate acquisition. And so today I'm specifically talking about Pro Forma NOI, or Pro Forma Net Operating Income, and show you what that means and how to calculate it and what your lenders or investors are probably asking you for. So with that, let me go ahead and dive in and use this template. I've got our multifamily apartment developer template here pulled up, and I'll put a link to this in the description of the video below so you can grab that and follow along. But I'm going to use this to demonstrate what this means. Okay, so I'm just going to start with a simple definition here from Google. A pro forma will include a projection of a rental property's net operating income. That's the NOI that people might be saying, net operating income. And that net operating income may also be called before tax cash flow. It's calculated by subtracting operating expenses from the effective gross income. So NOI equals effective gross income minus operating expenses. So we're going to look to see how do we in practice actually calculate this for a rental property, and particularly I'm using our multifamily apartment developer template here. So in this template, you'll see on the at a glance tab, so after you've kind of created your projections, this is your pro forma NOI, your projected net operating income. So you can see in the first couple of years, this is during the development phase, we actually have net operating losses, and then we swing to net operating income as the property is fully leased here. So if we again go back to this definition, pro forma really just means a projection. And so a pro forma means you're going to need to build out assumptions to create a forecast. So the lender wants to know what's your forecasted net operating income and what's that based on. And so in this template, we're able to produce a few different things that I want to just show you here. So on the income statement summary, what you'll see in that definition, it said effective gross income minus operating expenses. So here you can see how we calculate the effective gross income or the effective gross rental income. It's some more buzzwords here, but it's potential gross income minus your vacancy and credit losses. And that will equal your effective gross income, so that EGI, and then minus your operating expenses. So here's our operating expenses. And that's what gets us to our net operating income, the NOI. We can project that out over a 10-year period. And in order to create those projections, I'm not going to walk through this entire template, but just give you an idea of the types of things you're going to need to do and the assumptions you're going to need to build. So you're going to need what kind of unit types are you renting out, whether it's a single house or a multifamily apartment complex. How many units do you have? It's the square footage, the rent per square foot. In order to generate our potential monthly rent, we need to know if you're developing a new property, when it will be completed and when it will be rented out. And then we need to know assumptions about vacancy and credit losses here. So vacancy rates here. We also need to know our operating expenses to operate the property, and we can set up different operating expenses as a per unit expense, a per square foot expense, or an entire property expense. You can see there's a lot here. We can add in facility manager, maintenance staff, salaries and wages. And you can also enter in all of your financing activities. And this might be what's actually driving the request in the first place. You might be going to the lender, they ask you for a pro forma NOI, and you're going to need to really produce a whole forecast for them. And then you're also going to have a construction budget. And so we've got details around the construction budget. So all these pieces kind of work together to ultimately help us produce that net operating income forecast or pro forma. So hopefully at least you know what the lender is asking for at this point. We have a number of different real estate related templates. And so if you want to take a look at those, you can go down in the description of the video below and check out the link with our various real estate related templates that will help you produce that pro forma net operating income. And if you have any questions along the way, please reach out to us at support@projectionhub.com or leave a comment in the description of the video below. All right, thanks. Hope that's been helpful.